Hello, in this video I'm gonna walk you through the financial model Excel template. I will show you the main inputs, the core outputs, reports and charts. So let's get started. On the dashboard you can input your core drivers for the model under core input section, input equity waterfall, debt assumptions, and review the core financials and profitability chart. So let's start with the model setup. First of all, you need to input the purchase price, including the acquisition costs. Let's pretend it will be 2 millions. Then you have to input the loan to value ratio, which can be 70%. This will drive the acquisition loan in here, which I will explain a bit more. So the amount now is 2 million multiplied by 70%. And 1.4 millions will be covered by acquisition loan. Then you can input occupancy ramp up, for example 3, which means that first month it will be 33%, next month it will be 67%, and starting from the month number 3 you will have 100% of your occupancy, which you will input on the input step. I'll explain it a bit more later. The next step is to input your acquisition date. It can be, for example, April 20. So this is the acquisition date. Launch. This will drive also the acquisition loan. The next step is to input your operation start date, or the date when your business starts to generate revenue. For example, June 20. Then you have to input hold period months, for example 80. You may see that your core financials now are stopped in 26. That's because you have sale date is December 26, which is acquisition date plus 80 months. Let me back to 115. So the next step is to input your exit cap rate, for example 7%, and sales expenses, for example 5%. So you have now sales price as an output, sales expenses, which is a percentage of sales price, and net sales price. On the top right you have debt assumptions. As we just discussed, acquisition loan is driven by purchase price and loan to value and the acquisition start date. But you can change the full term, for example 100 months. You have interest only period with 10 months. So in this period you will pay only interest. Annual interest rate 10%, for example, and one of two types, usual or annuity. Let me give you another example. Other loan, so it can be 200,000, for example, with launch in June, with term of 115 months, with interest only for 5 months, with interest 12%, and it can be annuity, for example. Below you may see also the debt service coverage ratio, or DSCR. Also you may review the core financials once you set up the inputs, wages, expenses and seasonality. And also on the bottom right side of the dashboard you may see the profitability chart by years, which includes revenue, EBITDA and EBITDA percentage. On the top right section of the dashboard you have equity waterfall with IRR hurdles, assumptions and outputs. So you have 4 sections here: equity contributions, promote structure, partnership level returns and property metrics. So under equity contributions you should set up the allocation between general partners investors and limited partners investors contributions. So let's pretend general partners investors share is 5%. And other 95% is for limited partners. To the right you may see the calculation of amounts for these contributions. On the next section you can input the promote structure assumptions, which is hurdle 2, 3 and 4 IRR. So let's pretend for hurdle 2 the IRR hurdle will be 7%, hurdle 3 12 and 16 for hurdle number 4. And you have the GP promote depending on hurdle, 5%, 10 and 15 for example. So you may see to the right how this promote impacts the shares of general partner and limited partner. So for the hurdle 1 you have 5 and 95, which is equity contribution share. For the hurdle 2 you have 9.8 and 90.3%, 14.5, 85.5, 19.3 and 80.8%. The next section will show you the partnership level returns, which is cash outflow or cash contributions, which is the same amount, 28 and 536,000 here. You can see the profit broken down by limited partner and general partner, the IRR percentage, and multiple on investment capital or equity multiple. You can see also some property metrics for the acquisition and exit, like purchase price per room and total, purchase price less debt proceeds per room and total, exit sales price per room and total, and finally net sales proceeds per room and total as well. On the equity waterfall tab, you may see all the calculations by months for the equity contributions, promote structure, so you can see the net cash flow for distribution, summary of investor level returns by months, return of capital and hurdle or preferred return, hurdle 2 calculation, hurdle 3 calculation, hurdle 4, some return metrics and some risk metrics. On the KPIs tab, you may see the main investors' KPIs and outputs, which are partnership level returns, property metrics, property level return metrics, and sensitivity analysis. Under partnership level returns, all KPIs broken down by limited partner and general partner KPIs. You may see the cash outflow or cash contributions, profit, IRR percentage, and multiple on investment capital or equity multiple. Under property metrics, you may see the acquisition and exit KPIs, which are purchase price per room and total, purchase price less debt proceeds per room and total, the sales price per room and total, and net sales proceeds also per room and total. Under property level return metrics, you may see the KPIs broken down by unlevered and levered cash flow, which are IRR percentage, multiple on investment capital, total cash invested, total revenue, total profit, and cash on cash return or average free and clear return. On the sensitivity analysis tab, you may see the different scenarios of your metrics like IRR, multiple on investment capital, and profit, depending on different hold periods, and exit cap rates. So these yellow cells are changeable. For example, you may say the middle point for your hold period 80 months. So you'll have scenarios for hold period 56 months, 68 months, 80 months, 92 and 104 months. Also you can set the middle point for your exit cap rate, for example 6%. So you'll have scenarios for 2, 4, 6, 8 and 10% of exit cap rate. On the sensitivity tab, you may see the values for your IRR depending on these exit cap rates and hold periods. If you would like, you may see the profit amount. Let's give a couple of seconds to update this tab. So you may see different profit amounts depending on the exit cap rate and hold period. Also on the top left cell, you may see the profit calculated by the model. The same way you have multiple on investment capital scenarios. So you can see the value calculated by the model and different scenario assumptions and outputs. On the income statement tab, you may see your main components of profit and loss, which is revenue, salaries and wages, variable expenses, gross operating profit, management fees, fixed expenses, EBITDA, total depreciation and amortization, reserves for replacement, EBIT, interest expense, net operating income, gain loss on sale, and finally net income. Each category has its own subcategories, so for example, if you would like to see the subcomponents of fixed expenses, you can click on this plus button and you will see the detailization of fixed expenses. The same works for revenue, for salaries and wages, like this, and for variable expenses, for management fees, depreciation, amortization as well. On the cash flow, you may see your cash flow from operating activities, from investing activities, from financing activities. On the cash flow indirect method, you may see the same information in more collapsed form, which is easier to review. And on the balance sheet, you may see your current assets, non-current assets, current liabilities, non-current liabilities, and your equity. Finally, on the summary tab, you may see the 10 years summary for the income statement, and here you may click and select specific year, and you will see this year broken down by months. The same information you may see on the charts below. Then you may see the main KPIs of your balance sheet, also for the 10 years and for the selected year with charts. And finally, the cash flow statement information for the 10 years and for the selected year by months with the charts, which will show you the operating, investing, and financing activities. On the top revenue tab, you may see your revenue breakdown by main components, which are rent revenue and other revenue. Also, you may see the breakdown of absolute values by years and percentage allocation by years. The same information you may see on the charts below, which is breakdown of percentage and absolute values. On the revenue depth and monthly run rate, you may review specific year, which you can select here, for example 2021, and here you may see the absolute values for this year and percentage allocation on the pie chart. Finally, on the revenue bridge, you may see the main components of your revenue growth. So you can set, for example, 2028, and the start year is 2022. So you may see the 2022 total revenue from the left side of this chart. From the right side, you may see total revenue for 2028, which we just selected. And in between, you may see the main drivers of your revenue growth, which is rent revenue and other revenue, with absolute values of this growth between these 2 years. On the top expenses tab, you may see top 4 expense line items and all other expenses collapsed into one line, which is other here. Also, you may see the absolute values breakdown by 10 years and percentage allocation broken down by 10 years. The same information you may see on the charts below, where you may see the percentage allocation and absolute values allocation by main expense categories. On the expenses depth and on monthly run rate chart, you may see the specific year broken down by absolute values on the charts on the left side and percentage allocation on the pie chart. On the expenses bridge, you may see the main drivers of your expense growth. So, for example, I can select 2022 till 2027, and on the left side I may see the total expenses for 2022. On the right side I may see the total expenses for 2027, and in between you may see the main drivers of this expense growth, which is salaries and wages in this case, property tax, lease and rental expense, interest expense, and other with absolute values on this chart. The charts tab, you may see the main financial KPIs by months for the next 10 years. On the top you can see the net operating income. The next chart will show you the EBITDA breakdown, which consists of revenue, salaries and wages, variable expenses, management fees, fixed expenses, and finally, as a blue line, you may see the resulting EBITDA by months. The next chart will show you the operating cash flow broken down by cash inflow and cash outflow. And on the revenue breakdown, you may see the rent revenue and other revenue by months. The color coding in the model is very simple. You may change any yellow cell in any yellow sheet within the model. This means that this yellow cell has some input, assumption or driver which impacts the calculation within the model. Blue sheets means that on these sheets there are some charts, reports and other information which can be useful for reporting purposes. On the tabs without color, you have some extra calculations related to revenue, to debts, equity, inventory and everything which is needed for the reporting. Additionally, you have Contents tab, which allow you to navigate across the model very simple. So you may click on any report and you can go back. It is broken down by reports, assumptions, statements and setup. There is short explanation about what each tab does, but if you want to know more, you can go to How To and to see more detailed explanation of what each tab does and what inputs you may find on this sheet and what kind of outputs you may find on this sheet as well. Any header of this section is also clickable, so you may click on, for example, Book Assets and you go directly to this tab. On the Inputs tab, you can input information about your property units. So you have 40 placeholders and you can treat them as unit types or specific property units, which means that, for example, studio apartments, you can input 40 different units, or it can be separate building 1, which is obviously 1 unit in this case. All these yellow cells are changeable, so you may just put any name you would like. Here you have count of units. Again, for unit types it can be more than 1. In case of specific property unit, it will be 1. The total square feet for this unit type or unit group, average occupancy by groups, average rent per month per occupied unit, average other revenue per month per occupied unit, and average dollars reserved for replacement for available unit per month. So for example, $1,000 rent per month, other revenue can be $50 per month, and $15 for replacement. Additionally, you have yearly growth rate for this rent, other revenue and replacements. So it can be 5% for example next year, 2% in the 22, 23 and 24, and thereafter you can put just 1%. And to the right you may see the yearly growth multiple, which is calculated based on this percentage by years. On the Seasonality tab you can input your unit's occupancy rate seasonality factors. Let me explain you how it works. For example, in January I'll put -7%, and what does it mean? Imagine you have average seasonality for unit group A, which is 80%. This means that in January it will be 80 minus 7%, which is 73%. For February it will be 80 minus 5%, 75%. In May, for example, it will be 80 plus 8%, which means 88%. All these yellow cells are changeable, and also below you may see the chart with graphical visualization of this occupancy rate seasonality allocation by months. On the VM Expenses tab, you can set up your variable expenses and management fees. So you have two categories here: variable expenses assumptions with 15 placeholders and management fees assumptions with 6 placeholders. Some of the names are predefined. These are most typical names for these categories, but you can rename them as well. For example, utilities you can rename as other variable expenses or any other name you would like. So here you have also the notification or explanation how it will be calculated. All these variable expenses will be calculated as a percentage of total revenue. So for example, for admin in general, for 2020 it will be 1%. Then each next year you can add, for example, 0.5%, which will be calculated as a percentage of total revenue. The same idea for all other line items. For the management fees you have 3 options: to input management fees as a percentage of total revenue, as a percentage of rent revenue, or as a percentage of other revenue. Idea is the same. You can just set up the percentage by years. So below you have the main drivers for the calculation, which is revenue breakdown, rent revenue, other revenue, and total revenue. And below you can see the calculation of variable expenses and management fees by line items and by months. And finally, in the income statement under variable expenses section and under management fees section, you can see the values by months and broken down by line items. On the Fixed Expenses tab, you have 25 placeholders to set up your fixed expenses line items. So let me show you how it works. First of all, in the Categories column, you need to input the name of this fixed expenses line item, for example, utilities. Next column is launch or start date. By default, this is connected to the operation start date on the dashboard, but you can change it as well, for example, December 20. The end date is also connected to the sales date on the dashboard, but you can change it, for example, January 29. Then you have 8 different periodicity approaches, so let me show you how it works one by one. For example, one time you're spending of $1,000. So obviously, if you select it one time, you don't need end date, just one date and one spending. So you have in December 20, $1,000. The next, you can select the daily basis, and you will have $31,000 because in December you have 31 days. Then January 31,000 again, February is 28,000, etc. till the January 29. Well, the January 29 is the last date when you have this category of fixed expenses. Another option is weekly. In this case, you will have 4 payments each month, 4,000 per month. If you will select bi-weekly, you will have 2 payments roughly each month, so in this case you will have $2,000. In case of monthly, you will have steady $1,000 per month till the end, which is January 29. In case of quarterly, you will have 1 payment per quarter starting from December 20. As you may see here, if you will select semi-annually, you will have 1 payment per each half a year, starting from December 20. And the last approach is yearly, you will have $1,000 each year in December. Additional cool thing which you have in the model, this is yearly growth rate. For example, if I will select monthly, August 20 for example, and I want to add 5% of growth the next year, then 4% into 2022 and 2% each next year. So you may see that starting from January 21, you will have instead of $1,000, $1,050. Then in January 22, within the year, you will have $1,092, and etc. till the end of the model. So you'll have steady growth of this fixed expense by years. And finally, in income statement, in the fixed expenses category, you will see the breakdown of your fixed expenses by line items and by months as well. On the wages tab, you have 19 placeholders to set up your staffing assumptions. So let me show you how it works. On the categories column, you need to set up the position name, for example, CEO. The hire date by default is connected to the operation start date on the dashboard, and fire date is connected to the sales date on the dashboard as well. But if you need, you can use the drop down to select the needed date. For example, for CEO, the hire date will be May, and the fire will be still the sales date. Then you need to input the annual base salary, for example, $50,000. The next step is to set up your monthly bonus, for example 5%, and payroll tax rate, for example 12%. In the next section, you can input the staff count or FTE count, so it will be 1, for example, across all the years. Let me give you another example. For example, manager. We want to start hiring in September 20, and June 28 will be the last date or fire date. So you may see immediately 29 is gray here, so you don't need to input any FTEs here. So the annual base can be, for example, $40,000 with 3% of monthly bonus with the same 12% tax rate. We want to hire 2 in 2020, 4, 6, 8, 10, 12, and steady 12 till the end of the model. So additionally, you are able to set up the annual salary rise position or annual salary growth. It can be, for example, 5% across all the years. So below you may see the calculation of your annual salary, depending on annual base and depending on the salary rise percentage. Below you may see the total headcount calculation or total FTE calculation by months, calculation of salaries by months, bonuses by months, and payroll taxes. And finally, in income statement, under salaries and wages category, you may see the breakdown of your salaries and wages by positions and the amounts by months. On the assets tab, you have 7 placeholders to set up your assets categories or groups. First 2 lines are predefined, which is land cost and other construction cost, and these costs are linked to the table of construction costs. So the land purchase amount is 2 million and everything else is in the second line item, which is other construction costs. Obviously, land cost should not be depreciable, so useful time years is 0. So you may see in here the calculation of capital expenditure and the closing net book value, and no depreciation for land. For the second line item, you can input some useful time in years, for example 25 years. So you may see the capital expenditure by months, you may see the book depreciation and closing net book value. Also you have 5 different placeholders for other construction costs or assets, for example asset 2. So you may input some purchase date, for example May 20, 1 million of asset costs and 5 years of useful time. So you may see below this asset 2, 1 million spent in May, and the depreciation for the next 5 years and closing net book value for the next 5 years. So in income statement tab we can see the total depreciation and amortization amount by months. On the cash flow you may see the fixed assets capital expenditure by months. And on the balance sheet we can see under fixed assets the closing net book value of these assets. In the top right corner of the dashboard you have 3 placeholders for the debt assumptions. First line item is predefined for the construction loan. So you have the total construction costs, which I'll explain a bit more and which you will input on the construction costs tab. So you have loan to cost ratio, which is 60% in this case, and the total amount of construction loan is $3.8 million. The launch date also connected to the construction start date, so you should not change this date in this case, but you can change the full term in months, which can be, for example, 80 months. The interest only period, which can be 10 months, for example. For this period you will not pay any amount of the loan, but you'll pay only interest. It can be 5 months, for example. Then you have the interest rate, which is annual interest rate, can be 10%, for example. And you can select the type, which can be usual or annuity. You have also 2 another placeholders to set up, for example, construction loan 2. So you can input some amount, $100,000, some launch date, for example April 20, some term 60 months, the interest only period, it can be 0, for example, or 3 months. Again, annual interest rate 12%, and the type can be usual. So in income statement you may see the interest expense calculation. On the cash flow you may see the interest paid under operating expenses, and under financing expenses you may see the total debt drawdowns and total debt repayments. And finally on the balance sheet, under non-current liabilities, you can see the total debts outstanding amount. On the top of the dashboard you have currency and denominator assumptions. So let me show you how it works. First of all, you have a section with currency inputs and currency outputs. If you would like to see all the model assumptions and outputs in the same currency, for example in United States dollars, you can just keep default values and keep exchange rate as a default as well. But for example, if you would like to input all the assumptions in United States dollars and see the outputs in euros, you need to input the currency exchange rate in this case. This can be 1.2 for example. So what happens? In all the reports now you can see the numbers in euros. The same for charts and all statements like income statement, cash flow, balance sheet and all other reports. Another cool option is to use denominator. By default you have 1000. What does it mean? It means that for the all reports and charts you have $1,000 as a denomination. Means that this is in $1,000 or euros in this case. But if you would like to see it in millions, you can just change this denomination, and instead of thousands you will see millions. You can use just one and you will see in dollars, so no denomination applied. I hope you enjoyed my video. Thanks for reviewing this. You can find more on my website finmodelslab.com, and we'll see you later in the next videos.